Hello, everybody. Thank you for joining me again. I'm really pleased today that we're going to be chatting with my old friend, Richard Donnell. There are a few wiser and more experienced analysts in the housing market, and Richard runs things in the research side at Zoopla, has done for many, many years, and is certainly my go-to man of the moment and when I'm trying to decipher the crazy and mad world of property. And hasn't it been a crazy time, Richard? Now, we last did one of these chats in, I think it was February 2019. And I was thinking, well, what did we talk about? But the answer is whatever we talked about, we would have got it wrong, wouldn't we? Because the world changed.
Absolutely. I think it's we were in the middle of, or coming to the sharp end of the whole Brexit cliff edge.
Yeah.
We'll talk about cliff edges later, I'm sure. We had interest rates had gone up. The housing market was particularly weak. And then we were getting ready for a general election at the end of 2019 that actually released a lot of demand into the housing market, particularly in London. And then the pandemic hit. And then, you know, the rest is history on the last 18 months, which has been an incredibly strong housing market.
Yes. You've obviously at Zoopla got lots of wonderful data to analyze. What does it tell you how people have reacted over the last sort of 12 months? How have they reacted to being locked up, for instance? What have they been doing? What have they been looking at?
Well, there's been a huge, last year, I mean, I think for me, the pandemic boils into three stages. The first was the shock of literally most of us being locked up in our homes for a couple of months. Yeah. Then the sort of cork was released when the first lockdown ended. A lot of pent-up demand came into the market. People were sort of clearly searching for space, realizing that they wanted something different out of their home. Yeah. And then in 2021, it's really been a tale of the stamp duty holiday extension, brought a lot of people into the market in the spring. We've seen a much broader balance of people. Lots more first-time buyers have come into the market this year because mortgage availability has improved. Whereas last summer, in summer 2020, in the immediate wake of that first lockdown, it was very much wealthier, older homeowners with larger properties, not relying on a mortgage. They were the ones that really drove the market. Okay. So we've got a lot more balance now. And I think as we look into 2022, it's going to be all about the working from home, hybrid working. How's that going to sort of have an impact? And I think the key story is that the market is, the pandemic impact is not finished. And it's very much the search for space continues. But it's all about different buyers wanting different things at different points in time.
The search for space and the move from city to country, and there's been lots of chat about that. Do you see that remaining the case?
I think it's been slightly overstated. Yeah. I think there's always a move generally out of, people come into cities to start their careers, build families, and then tend to get into larger homes, which tend to be outside cities. So the pandemic has sort of created that narrative. It's an important factor. I think a lot of people who are effectively, there's a national reevaluation of what people want from their housing, and we all typically want a 3-bed house. And so people have naturally gone, well, I want a 3-bed house, I want a 4-bed house. And the research we've been doing shows that actually people are prioritizing outside space as much as they're looking for the physical size of a home. The people who are most interested in the physical side of the home are the young, small, growing families. Yeah. Well, young families who are short on space. For the rest of people, it's that out the balcony for the flat and or the larger garden is a really important feature. And clearly, if you have a larger garden, you typically have a larger house.
And you can see that as people put in their requirements on the Zoopla site, that the request is much more for a large garden. And I guess they're putting up office pods and things in the gardens and thinking forward, what happens if it all happens again and I'd have to work from home for another 4 months?
No, absolutely. And as I say, we think that, if you have a big pandemic and literally you lock up an entire nation, it's not going to be all over within 12 months. Yeah. And I think there's been a lot of talk of this cliff edge of stamp duty, but we're seeing demand for housing remaining really strong. It's actually going to end the year stronger than it did last year. Okay. And I just think it's got further to run. I think, people haven't been moving as often as they might normally do. And a lot of people are taking this opportunity to sort of reevaluate what they need from a home.
But thinking, so we have now finished with stamp duty, we've finished with furlough and all of the other support packages. Are we yet feeling the pain? Or has that kind of been felt in the market yet?
No, not really. I'd say we're seeing there's literally no sign of any cliff edge in stamp duty. Look, historically, stamp duty holidays have led to a sort of shortfall, people bringing forward decisions and a shortfall in sales in the quarter afterwards. Because of the tapering and because of this ongoing pandemic impact, I mean, people are still in the market looking for things to buy. So it just hasn't materialized. And I think because we're sort of, the economy's still pretty strong, people who put off decisions are now thinking, well, maybe now's the time to move. The mortgage market remains super competitive.
Yes.
The main headwinds in the market are, we've got a higher cost of living, we've had the petrol crisis, people are now potentially starting to worry about, well, actually, how much are my costs going to go up, my heating bills, etc. Again, there's quite a lot of speculation in the media about, will interest rates start to rise next year? And therefore, what does that mean for mortgage rates? But again, we expect mortgage rates to go up a little bit next year, but remain still relatively affordable. So we just don't see these sort of headwinds derailing the momentum that's sort of built up in the market. Okay. We're not saying next year is going to be as strong as this year. Yeah. It's going to be slower, but it's not all going to grind to a halt.
No, I don't see it grinding to a halt. But there's a lot of factors at play, and there is a lot of variables, and we've got to pay for this pandemic somehow. So when are we going to do that? How long is that going to take? And there's got to be some pain felt, surely. But that's in the economy. I'm not saying it's in the housing market. But
absolutely. And I think there's going to be more headwinds that are coming. We've got tax rises on national insurance coming in 2023.
Yeah.
The single biggest thing that's going to impact the housing market in the next 10 or 15 years is the climate agenda. How do we start? Well, I think ultimately, and you saw the first announcement recently from the government about the need to decarbonise housing. There's 85% of all of our homes have gas boilers. Yes. All of that gas needs to either be zero carbon emitting gas or we've got to use heat pumps. So there's a lot of investment needed in housing, in our housing stock, to green it. And to your point, someone has to pay for that over the long run. And so I think it's all going to be part and parcel of the ongoing investment we make in our homes, but we're going to have to be greening them. So it's not just the cost of paying for the pandemic, it's also there's a cost around how do we effectively help the government, so that we as all homeowners or landlords invest in our homes to make them greener, to reduce greenhouse gas emissions. Yeah. And that's quite a big cost that's going to play out over the next 10 or 20 years.
Interesting. How do you see things for tenants? Are they being well looked after now?
Well, I think there's been a lot of regulation in the rental markets around improving standards, tenancy deposits, et cetera, et cetera. That's probably going to continue. I think the scarcity that we've seen in the sales market is even worse in the lettings market at the moment, because renters have stayed put effectively. People who are uncertain about their job prospects or been furloughed or whatever, they've sort of stayed put in the rental market, and we haven't seen enough stock coming to the market for rent, which is limited available supply. We've seen a lot of demand come into the market, particularly since the summer, because of the economy reopening, people moving back into cities. And so we've kind of got rental growth at record highs at the moment of about 4 or 5%. And a lot of the cities are rebounding back. So the outlook for rental growth is good. I think some investors have come back into the market. So there is some more growth in stock, but the overall availability of supply is going to remain constrained. That means rents are going to keep moving upwards. And again, I think, the government's got to be careful about how it regulates the rental market. And again, there's talk of at the moment, you can't let a property out if it's a low EPC rating, energy efficient. And there's talk of increasing that, landlords needing to make investments in their property. So again, we've got to be careful that we don't see landlords exiting the market, reducing supply even more, because the rental market's grown significantly. We need to keep that decent choice in all tenures.
I guess that's what makes what you and I do interesting, why we've done it for such a long time. But it is a fascinating how the market moves, and it feels to me we are in a state now where there's such limited supply on the market for sale. People might want to move, but they think, well, if I could sell my house tomorrow because there's not many houses to choose from and the prices are going up and the agents are calling all over them, we'll have 20 people in to look at it at the weekend. But if I put it on the market, there's nothing for me to buy. So I'm going to hold off. Or they think, okay, well, I'll sell it, I'll get a good price and I'll rent. But then they look at what's available to rent. They go, well, there's nothing to rent. So they stay and don't do anything. So it feels like we're a bit sort of frozen, locked. And I'm worrying how that situation sort of gets resolved and dissipates. Any thoughts on that?
No, it's a really good point. And I think we simply don't know enough about, and you're right, I think about homeowners and their decision-making process. I think the general assumption is people tend to find something before they put their own home on the market. We've definitely got this lack of supply, but we still have sales running at an above average level. So the way I describe it is we might have fewer homes for sale, but we almost got more committed sellers.
Okay.
And I think the most important thing for the housing market is to have people who are serious about selling, basically, because almost the worst thing for the market is where you have too many people sort of flying a kite, hoping to get the right price. Buyers aren't there to pay that price. You can end up with a standoff, even with a lot of supply on the market. So I think for me, and again, people are biding their time. I'd imagine we'll have a pretty decent start to next year. I'd like to think we're going to see more people come into the market. A lot of people have made quite a lot of increases in equity in the value of their housing in the last year. I think that will bring people in. I think the pandemic will be working its way in the background. These are things, again, that we haven't seen over the last 5 or 6 years. So I think those one-off factors, I'm optimistic, will bring more people in, but there's not going to be too much supply in the market. I think we're going to be in balance. But you're absolutely right. The risk is there if people just sit on their hands and wait 3 or 4 months until they think, well, maybe I'll wait till something's on the market, next spring and almost do nothing now.
Richard, what's the sort of data showing on the portal about any hotspots around the country? I was up in up north in Northumberland 2 weeks ago, and the market there was crazy. And somebody said, yeah, it's like the 6th most visited place in the country on your website. Yeah. Any particular hotspots you've noticed?
Yeah, look, I mean, the further you are from London, the southeast of England, the hotter the housing market. I think it's as a general rule of thumb. And places like Rochdale, places like Liverpool, places like Nuneaton, Wellingborough. I mean, just the Midlands and the north of England have just got very strong market conditions because housing remains affordable, and there's almost very few limits on how much people can bid up the cost of housing. In terms of the time to sell, it's places like Wellingborough and Nuneaton. I mean, they're less than 2 weeks for a property to go from on the market to under offer. But it's fair to say that all regions across the UK have got a time to sell of less than a month. So yes, the market's pretty hot and prices are rising, but not unsustainably. And I think in London, the southeast, anywhere with very high house prices, there are affordability challenges. So there's still deals happening. Things are still happening at a normal level, but they appear weak in the rest of the country just because the rest of the country is almost unsustainably strong, I would suggest.
Good point. I'd never thought of that. Absolutely right. Any thoughts from you on what I sort of describe as dormitory towns? So the towns that, I mean, the one I always think of is Croydon, 15 minutes into London Bridge. It's full of commuters, young people, brilliant, fantastic, weren't paying London prices. But now the people that, and there were lots of examples around metropolitan cities of similar things. Now people are working from home more. The 15 minutes on the train into London Bridge isn't quite so important. How will those real dormitory towns, proper commuter places, how will they bear up over the next 6-12 months?
I think they're seeing a lot of demand. I think, I'll give an example. We did a big analysis. When everyone was talking about everyone exiting London, we actually looked at, well, hang on a minute, what are people in London on Zoopla looking for? And half of all the people in London looking in London to buy were looking in London. They weren't looking at commuter towns or moving to Norfolk or deepest dark at Kent. So a lot of people are still looking to buy within London. But when you look out of London, it was places like Swindon, it was places like Milton Keynes, it was the Dartfords. People are looking sort of further afield, basically. And so that's supporting the demand in those areas. But it's always been the case. I just think it's been amplified by the pandemic, basically.
Okay. It's really interesting hearing you say that, because you are speaking from a position of authority and knowledge, because you can actually analyze the data. You're not guessing, you're not making it up. I'm not having a go at journalists, but that's opinion. Actually, what you're telling us is fact, because you can analyze it. Do you think the whole work from home situation is here to stay on a kind of flexible way?
I think the For people based in an office who could work flexibly, I think there's going to be a move to more hybrid working.
Yeah.
So not necessarily all at home or all in the office like we used to have.
Yeah.
Again, it doesn't apply to the whole workforce. A lot of people are still pretty fixed in where they have to work and their connection with work. I think estimates are that around a third of employees might have the opportunity to work more flexibly. So it's going to have an impact for a proportion of the housing market and a proportion of people's decisions. But yes, I think that the future is a hybrid model. But I think that's the next phase that's going to really drive the market in 2022, because this hybrid model and how we work and where we work is only just now at the sort of top of the agenda for a lot of big employers. And I think, I don't think anyone truly knows what the answer is. I think that's going to play out over the next 12 months or so.
How are Zoopla coping with things? You've got people in the office, out of the office. How are you guys? Because there's 750 of you now, aren't there?
Yeah, that's right. When our head office used to have 450, desks of 450 people. I think it's, we've definitely moved to a sort of hybrid model. And I think, look, it's we had a huge shock of learning to work from home 100% of the time, and how to sort of endless Zoom meetings, etc. I think now we've moved to this more hybrid model, and again, it's about really working with your staff and how they want to work, and in a super productive way, basically. And I think that's what all employers are facing at the moment. Yeah. And again, it's going pretty well.
Good. I'm sorry to ask you this, Richard, just as a final question, but I always value your opinion. Crystal ball time. What does the landscape in the housing market look like in, let's say, 12 months?
I think that the rate of house price growth is going to slow. We can already see it slowing in the data. I mean, it's because of this change in the types of people who are buying property that has an impact on house price indices. And so we think at the end of next year, so December 2022, we think house prices will be 3% higher than they are at the end of this year. We think this year prices are going to be up by about 5%. And then within that 3% for next year, again, if you're in the Midlands and the north of England, or if you're in more affordable housing markets, it's likely you're going to see above average growth. Yeah. London, the southeast, are going to see below average growth. And I think in terms of the overall number of sales, because actually what's more important than price rises for everyone is just how many people are going to be moving. So this year, it's pretty certain the market's going to have its strongest year since 2007, with 1.5 million completed sales. Really? And we think next year that's going to be about 1.25 million, which is in line with the long run average. So we still think people are going to keep moving, despite some of the headwinds that are coming. Yeah. We still think the housing market's going to remain active. The pandemic's going to have an impact for further.
Really, really interesting and useful. Richard, always value your wisdom and your time. Thank you so much. I'm sure our audience will get a lot of help and benefit out of that. Much appreciated.
Thanks, Phil.